Oil prices and gas prices continue to move lower. I wanted to break down USO stock, which is the ETF for energy, as well. I wanted to take a look at XLE stock, which is the energy sector ETF, and show how the relationship between the price of oil and gasoline, when they move lower, so does USO stock and XLE stock. I wanted to kind of break down what's happening with the U.S. economy and why we're seeing oil prices and gasoline prices move lower. And of course, USO stock and XLE stock, why they're trending lower and what to expect next. Let's jump in. If you're finding my channel for the first time, thanks so much for stopping by. This is a brand new channel for me. I have my original channel, and what I do here, I'm an economist. I break down the economy and how that affects the stock market and the various components of the stock market. And here we are looking at oil prices. And as you can see, there's a pretty sharp sell-off over the past couple hours. This is the 1 hour bar chart, and it only encompasses about 4 hours there where things got really kind of ugly. We'd seen some moves lower in oil prices. Gasoline prices are following almost exactly in suit. I often trade in some ETFs. And so I wanted to show the oil prices and then USO stock, which is the energy ETF. Let's put this into perspective, though. That big sell-off, it looks ugly, but when you look at this is WTI Crude, West Texas Intermediary, kind of right there in the middle, slightly below the middle. Now, what's going on? First, our economy is starting to contract somewhat. So any supply that is being created isn't being met with demand. So producers are sitting on supply. What do you do with your extra supply? You drop your price, you sell it off as best you can, you move forward as quickly as you can. Interest rates are also playing a kind of a bit of a role. As interest rates continue to move higher, not only are they affecting the U.S. economy with, we're seeing some contraction in employment, but interest rates moving higher would affect energy stocks as well because it is such a capital intensive industry. So this price on oil right here, it's kind of midline, starting to move below that midline sort of range. We'll probably see these prices, oil prices, moving lower somewhat. I was a little surprised to see today's move lower because it happened prior to any kind of economic data announcements that we got. But interest rates are going to remain higher for longer. The inflation data that we got this morning will iterate that. Oil prices may continue to move lower. Eventually, OPEC is going to sit there and start cutting. And those cuts will mean less supply, which will mean it will match demand. Price could go back upward at some point. I'm the kind of guy who's going to take USO stock and sell some puts. The recent move was actually kind of welcome in that regard because this is the monthly chart, of course. We've seen a decent move downward. I'd want to see kind of getting closer to 80, and I'll probably step in and start selling some 70 puts on oil. Here is a look at oil prices themselves and USO stock. Again, USO is the ETF for this. So if you are a trader looking to take advantage of this, for me, I'm a stock options trader. If I want to get in and own a stock itself, any kind of stock in general, I'm a value investor. But when it comes to playing the market, here we're looking at the weekly chart of oil versus USO stock. I get in and I do options. I'm looking to sell some puts at some point because I think USO stock would be an easy one to sell some puts, sit on them, bring in that theta, let the time evaporate, and I'll take a couple pennies here and there. I'll do that frequently. I wait for kind of volatility to spike up because of one move outside of a normal range, sort of like what we just saw. Then I step in, sell puts or calls, whatever might be the case, given that, and then just collect that premium. Volatility spikes up. The next day, volatility probably mellows out. I make a quick buck. Do that all the time. Here we're looking at the U.S. Treasury yield. Now we got some inflation numbers this morning, and the Treasury yield kind of went sideways on it. The yield sold off overnight prior to the announcement. We got the inflation data, and then the 10-year moved back upward off of its lows for the day. This is yield, not price. I expect the U.S. 10-year Treasury yield to kind of move sideways for some period of time. Interest rates will remain higher for longer. I expect inflation to sit there getting real sticky, doing nothing. The stock market, the broader stock market, will probably be capped and start moving a little bit lower because investors are going to get nervous. Not to mention the fact you've got a 10-year Treasury yield that you could invest in, lock in, guarantee your rate of return for the year versus sitting on stocks which might be overpriced and a lot of downside risk. Here is a look at XLE stock, which is, so this is WTI versus XLE stock. This is the energy sector ETF. With these price movements lower, as oil prices move lower, XLE stock and all the holdings within there, and I'll move forward just briefly, ExxonMobil and Chevron are about 40% of this. The remaining stocks in here, and I have the next three largest, are about 4% each. But those top two, Exxon and Chevron, are 40% of the entire XLE energy sector ETF. Let's go back to that chart. As oil prices move lower, so will those stocks. So if you wanted to take a broad look at what's happening with the U.S. economy, and you thought, you know what, oil prices are probably going to drop somewhat, margins and profits are probably going to drop on these energy sector stocks, a good way to take advantage of that would be possibly buying puts on XLE. If you're really kind of a savvy investor, selling calls to bring in some premium to pay for those puts, with the eventuality that oil prices would trend lower, those stocks would likely trend lower faster, at a faster rate than the price of oil, simply because oil prices would really drive total revenue and profits. And as we've seen these moves lower in oil prices, you haven't seen the same moves lower in XLE stock. So there might be some juice in the tank there. This is something I really wanted to point out because I think that the XLE stocks are a little overvalued relative to their core energy oil price. We'll see how that plays out. Nonetheless, I'll continue to update this because I think it's such a big thing. Make sure to hit that like and follow button if you are looking for content where the economy is sort of first and foremost, and then how that affects the individual sectors and the stocks themselves individually. Make sure to hit that like and follow button. See you in the next video.